This is a solid bullish trend as clearly marked by this indicator. Now, you might be wondering, how can we tell if the trend is actually strong? Well, just check out this number right here. It's showing 100. But if it were a weaker bullish trend, this number would be a lot smaller, maybe something closer to 70%. So this indicator doesn't just tell you the direction of the trend, it also gives you a sense of whether the trend is strong enough to take positions or if it's too weak, meaning the market is stuck in consolidation, helping you avoid trading in those kinds of conditions. In this video, we're going to dive into exactly how you can use this indicator in your trading. If you find this helpful, don't forget to hit that like button. Let's jump right in. Now, to add this indicator to your chart, you'll want to head over to the trading view and open any trading instrument you like on any time frame. For example, I'm going to use the 5-minute chart for GBP JPY. Next, click on the indicators button and type in levels strength index. I'm using the one created by Big Beluga. A big shout out to him or her, by the way. Now you might be asking, what exactly does this indicator do? Well, the levels strength index by Big Beluga is a trading tool designed to help traders evaluate market strengths and momentum by analyzing price positions relative to predefined levels. As you can see, it's a pretty straightforward indicator, made up of a few key components. First, looking at this indicator, you'll notice there's a trend ribbon that changes color between orange for a bearish trend and green for a bullish trend. Zooming in, you can see it's split into 10 predefined levels, labeled from level 1 up to level 10. These levels are super helpful when figuring out the strength of the trend. There are also these labels, which are basically up and down arrows showing whether the price is above or below a specific level. Each level has its own arrow. So you can see this arrow corresponds to the first level, the next one to the second one, and so on, all the way to the top level. If the price is above a specific level, the arrow turns green and points outward. But if the price is below the level, an arrow turns orange and points downward. You'll notice the trend ribbon changes color instantly when the price crosses above or below certain levels. For example, here the price is above first 5 levels, but below the last 5 levels. As you can see, the first 5 levels on the ribbon are green, while the levels where the price is below are orange. When using this indicator to trade a strong bullish trend, you want the price to be above as many of these levels as possible. For a bearish trend, you'd want the price to be below as many levels as possible. Next, there's this table, which is a probability table that shows the chances of upward or downward movement. The probability table gives you insights into whether the price is more likely to go up or down. For example, in a bullish trend, if the price is above 8 levels, it will show an 80% chance of moving up and a 20% chance of moving down. If the price is above 7 levels, it will show a 70% chance of moving up and a 30% chance of moving down. These probabilities are displayed with directional arrows next to the price, giving you a quick visual of the market's likely direction. At the center of the trend ribbon, there's also a probability-based price line with bright green and bright orange colors that depend on the percentages. If the price is more bullish than bearish, the line turns bright green. And on the other hand, if it's more bearish than bullish, it turns bright orange. This price line works together with the trend ribbon to give you a quick snapshot of the market's direction. When combined with the probability table, you'll not only see the direction of the trend, but also its strength. And that's exactly how we'll use this indicator to trade. But before we look at some trade examples, let's check out the settings of this indicator to see how customizable it is. First, you'll see there's the length setting, which determines the number of historical candles used to calculate the predefined levels. By increasing or decreasing the length, you You adjust the time frame over which these levels are generated. This affects how the indicator identifies and compares price positions relative to the levels. A shorter length, like 10, focuses on recent price activity and makes the level more sensitive to short-term market fluctuations, which is great if you're using the indicator for short-term strategies like scalping. A longer length, like 55, looks at broader price trends and creates levels that are less sensitive to price movements, which is useful for day trading or swing trading to identify long-term market strength. There's also the levels transparency setting, which controls how visible these predefined levels are on your chart. You can adjust it to make the levels more or less transparent, depending on your preference. Next, the price color setting determines how the price line is displayed based on its position relative to the levels. In the settings, you'll also see the trend mode option. I'm also going to lower the levels transparency to 3 to reduce the brightness of the levels or trend ribbon. Under the Style tab, you'll find several visual options that you can toggle on or off. For now, I'll turn off all the plot options and click OK. So we can move on to how to actually use this indicator for trading. Using this indicator to trade can be broken down into 3 key methods. First, trend identification. Second, trend strength analysis. And third, avoid ranging markets. Let's go through each one in detail. This part is straightforward. Traditionally, if the price is moving upward, it's considered a bullish trend. You could draw a trend line to check if the price respects it or breaks below. However, with this indicator, you simply activate it and the trend ribbon does the work for you. A green ribbon signals a bullish trend, while an orange ribbon signals a bearish trend. For a clearer market picture, you can combine this indicator with price structure or a drawn trend line. Once you've identified the trend direction, the next step is determining its strength. For bullish trends, the indicator considers the trend strength if the upward probability in the table is above 80%. If the price is above all 10 levels, you might even see a 100% upward probability, signaling a very strong bullish trend. However, if the price isn't above all 10 levels, the probability decreases, indicating a weaker trend that could reverse and stop you out. The same principle applies to bearish trends. A high downward probability when the price is below most or all levels signals a strong downtrend. For example, in a strong bearish trend, you'll see a 90% downward probability in the table. As long as it's above 80%, it's strong enough to trade confidently. Now take a look at this example and a weaker bearish trend. The downward probability is below 80%. Trading in these conditions could lead to unprofitable trades due to a lack of momentum. This indicator also helps you avoid consolidating markets. If the trend strength isn't at least 80%, whether bullish or bearish, there's a high chance the market is ranging. When probabilities are close to 50-50 situations, that's a strong signal of a choppy market. For instance, here we see an upward probability of 40% and a downward probability of 60%. Looking at the chart, it's clear that the market is ranging. To avoid trading in these conditions, ensure that first, bullish trends have at least an 80% upward probability, and on the other hand, bearish trends have at least an 80% downward probability. Anything lower suggests a ranging market, which is usually best to avoid. Now let's go through some real trade examples based on trend direction and trend strength. To do this, we'll need another indicator called HDF Support Resistance, again by my favorite Big Beluga. Once you've added it, first, double-click on it. Second, reduce all numbers to 2. 3, set the time frames to 15 minutes, 30 minutes, 1 hour, and 4 hours. Finally, click OK. Since we're on the 5-minute time frame, the lines on your chart will now represent support and resistance levels from those higher time frames. So actually, we're trading multi-time frame, which is the best scenario for trading on any market. To enter a long trade, follow these steps. First, wait for the price to break and close above a pivot high. Second, make sure the upward probability is exactly 100%. 3. Enter the trade. 4. Set your stop loss just below the entry candle. If the candle is very small, use the most recent swing low instead. And finally, set your take profit at 1.5 times your risk. For short trade, the process is same but in reverse. First, identify pivot low, in this case from the 30-minute time frame. Second, wait for the price to break and close below the pivot low. 3. Check that the downward probability is exactly 100%. Next, enter the trade. And finally, place your stop loss above the entry candle. If the entry candle is small, use the most recent swing high instead. In this long trade, the price broke and closed above a 15-minute pivot high. During the break, the upward probability was 100%. The trade was profitable as well. The strategies shown in this video aren't complete trading systems. They're simply examples of how you can use this indicator effectively. To maximize profitability, you shouldn't rely on indicators alone. Instead, combine them with price action confluences and build a trading strategy that works for you. If you want to know how to do that, or if you have your own trading system or strategy and you want more confirmation, you can use this and combine it with that. But if you're looking for something ready for you, just make sure to watch the recommended videos on your screen, because not only that, I've already showed you how you can completely automate any trading strategy into a bot with alerts, so it does the job for you while you're away, while you're on a trip, so you can just set and forget. That's it for this video. If you found value in it, don't forget to leave a like and subscribe to stay updated. Thanks for watching, and I'll see you next time.